Hi, welcome to Neppy Invest. So this is a video I wasn't really expecting to do when I woke up this morning, but one of the first things I do on Saturday morning after my morning run is I look at the previous day trading and I'm looking for volume spikes. And there is a reason I look for volume spikes is it's sort of an indication that the market is excited about something. And when I looked at this little program I run, the first company that popped up was this company, Amber Technologies. Not only were they top of the volume spikes on trading yesterday, the Friday, the 23rd of October, their share price increased by 108% in one day. So the market was definitely excited about something that happened with Amber Technologies. So I decided to just do a little bit of research in this company. So why did this ASX stocks share price rocket up by so much on high volume? So let's get into it. So this is the program I do run. It's just looking for spikes in volume, and I'm looking at spikes in volume compared to the average trading based off 10, 25, and 50 days. And I based off the last 50 days, and this company, Amber Technologies, with the code AMO, was tops in everything, highest volume traded in on based off average, and the share price rose by 108%. I didn't even have to look at the announcements. Something got the market excited. There was an announcement that was released at some time on Friday, and that announcement saw the share price take off like a rocket. So let's have a look at that announcement. So this company, I don't really know what this company does. It's not even on one of my watch lists. I do know a small amount of details about the company, but are not large. They are a leading producer and value-added distributor of audiovisual and communication solutions. Still don't know what they do, but that's a very simple thing about what they do. So this is the reason for the share price re-rate. They released an announcement at 11:22 a.m. and it was just sort of profit guidance for the half year ending 31st of December 2020. The market loved these numbers they gave out. So they gave out revenue, EBITDA, and profit before income tax. So income tax, or the profit before income tax, was 2.4 to 2.8 million. Now, some things you have to know. So those numbers in itself don't mean much. So first thing of all, the market cap of this company before the release of this announcement was less than $10 million. That's so $10 million. That's not much. When you get a profit before income tax of between 2.4 and 2.8 million in half a year with a market cap of 10 million, that is, say, a PE ratio, a very small PE ratio. And especially because they've grown a little bit from the previous year too, on revenue 34 to 38 million, that's the reason the market got excited. They just took those numbers and did some calculations and went, whoa, that's cheap. And that's why a lot of investors, traders just jumped on this as soon as it started trading again after its announcement. And we saw this happen. So this is the market response of the announcement that was released then. So this is just a 3-minute chart taken from about 11:22. So historically, this is a very liquid trading stock. Not much volume is traded. That's probably because insiders hold a large proportion of the shares, probably. I'm just guessing there. But what this has done, this announcement has added a lot of liquidity to the market. And you can just see this in this one trading day. A share price went from 12.5 cents to 35 cents in less than an hour. And then because there's always going to be some profit taking with that sort of rise in share price in 1 hour, we did see the share price pull back to about 25 cents and then just level off for the rest of the day. It's going to be very exciting to see what happens on Monday, trading day that day. This is very cheap stock still, even though it's gone up 108%, it's still quite cheap. So what I did this morning is I just went back through the historical financials. They do have a fair bit of history here, so they've been on the market for a while. So I did get 15 years of history, and the 15 years of history did show me not much has happened with this company. So this is looking at revenue and market cap on the left-hand side, this graph. And you can see revenue, if you look down the bottom there, I do have the numbers there. The revenue just stayed around 50 to 70 million every year for the last 15 years. They haven't grown, they haven't done much. The market cap, though, has drifted off. So it's reached a market cap of $20 million in 2007 and 8 and drifted off. And in 2019 and 20, it was around $4 to $5 million market cap. So If you're a long-term holder of this company, you just seen this company just do nothing. In fact, it was a value destroyer, in fact, over the last 10, 15 years. So market cap per year reached a minimum of $3 million in 2019. Now, I just put on the right there what they're forecasting for this half year, 34 to 38 million. So I've did a trailing 12 months, and the trailing 12 months does show in the previous 12 months from now, or the end of December 20, they did 67 to 71 million, which would be almost a record revenue in a year. So there is potential once they get the full year financial results for 2021, we're going to see record numbers come in for this company. Next thing I look at here for historical financials is looking at operating cash flow. Fortunately, they don't provide operating cash flow guidance. I wish every company did. They do produce EBITDA guidance, which is it's not a good proxy for operating cash flow, but in this case, that's all they provide. So I do use it as a very rough proxy, and also NPAT. So again, nothing much is happening with these two numbers over the last few years or the last 15 years. It's just nothing to be excited. There's no trend, nothing at all. But if you look at their profit for the half year, 2.4 to 2.8 million, which if they do no profit in the second half of the year, this would almost be a record, especially if they get to the top end. So this would be a record profit if they do nothing in the second half. Trailing 12 months, that profit is around 4.8 to 5.2 million. So in the past 12 months, they are running at a record profits. In fact, almost 2 times record profits. It's another reason why the market might be getting a bit excited here with this company. They may have reached an inflection point. And when a company reaches an inflection point, sort of like for you and me, it's sort of like a light bulb moment when something just clicks. So this company may have reached that point. So I just did some rough numbers. I wanted to look at the trailing 12 months. That's TTM mean. So what I did is I look at the 2 half years because the trailing 12 months falls in the last half of last financial year and the first half of this financial year. You can't get those numbers unless you do some calculations. So based off that, using the forecast numbers and the last half of the last financial years, I get revenue between 67 and 71 million and NPAT between 4.8 and 5.2 million. So it's roughly $5 million in profits. And just when you think about the fact that the market cap was less than $10 million, you're looking at 2 times, NPAT is 2 times market cap is 2 times NPAT. That's cheap. That's like a PE ratio of 2. So that's either a value trap or it's very cheap. I'll let you decide which is which this company falls into. So you can't use a PE ratio of 2 now because the share price has increased by 2 times. So share price is 25 cents at close on 23rd of October. With the shares on issue of 76.5 million or roughly, gives a market cap of 19.1 million. So it has doubled in market cap in the past day just because of the share price increase. And even with profits of $5 million, get an EPS or earnings per share of 6.3 to 6.8, the PE ratio is still roughly around 4. So even though we've seen the share price increase by 100%, the PE ratio is 4. Typically with a company, you can see PE ratios, some companies will be 10, 12, 15, high, fast growing companies would be 20, 30, 40 even. So this has room to grow. So one of the reasons you could see this company's share price just increase if everything remains static is just multiple expansion. So this could triple in price from here just based off multiple expansion, not take into account financial expansion. So it's looking cheap without even knowing what they do. So I sometimes do that. I just look at numbers. Numbers tell a story. And the next thing I'll do is look at what the company does. So some of the things I haven't taken into account here is debt. They do have a little bit of debt, so the enterprise value is going to be a little bit more than market cap. And I haven't taken into account operating cash flow because they haven't released any sort of guidance. I tend to use operating cash flow as one of the things I use to value a company. And because I haven't provided that, I've just gone back to the basics, PE ratio, earnings per share, even EBITDA. In any case, this is a cheap company or a value trap. Now, the next thing I do look is the charts. Very illiquid trading, not much is happening. So this is the monthly. So each of these candlesticks is a month, and each of those volume on the bottom there is a month. So not much is traded in the month. In fact, the big volume spike is a one-day volume spike that we had yesterday. In fact, the number of shares traded yesterday was a record for a month in one day by something like 4 or 5 times. So it was 4 or 5 times trading in a day that you usually see in a month, if that makes sense. So yeah, so it's been just, share prices has just been drifting downwards, not a lot of interest, the market's not excited. We did see some volume started to pick up in the end of last year, but it wasn't didn't really coincide with the share price increase at all. But now we've got the share price increasing coinciding with the volume spike. So that's something I look for. It's actually a very bullish sign. Now let's look at the 1-year daily chart. And yeah, no liquidity. So why don't we have liquidity? The reason I'm guessing right now, and this is just a guess, so don't hold me to it, is I think there's a lot of insider holding. So directors, owners hold a lot of shares, and they're not going to sell out. So there's not a lot of other people holding shares and they're not trading. What this has done is it's provided a lot of liquidity into the market. So you might have some long-term holders who have decided to sell out, taking maybe some profits, maybe trading for a break even. They've just seen the share price increase. I mean, now's the time to get out. And that's added some liquidity into the market, which is always a good thing. You want to see some liquidity into the market. So that's all I've got on Amber Technologies. What my strategy is going forward with this company is I'm going to buy a small parcel at open or near open on Monday, and then I'll do a little bit more research and whether I add to my portfolio of Amber Technologies, whether I get a little bit more excited based off what they do. Another thing I'm going to do is compare this company to Altium, not what they do specifically, but what happened with Altium around 2010 or 12. They had a very similar profile where they had like revenue of like 50 million or so for many, many years. Nothing happened with the share price. And then all of a sudden they reached an inflection point and the share price and the revenues just took off like a cheetah. Whether Amber Technologies can do the same sort of thing, I don't think they're in the same sort of field. So you can't really compare them, but I just want to compare the two companies because I just remember looking at Altium and just seeing they didn't do much for many, many years, and whether you can compare the two. And you shouldn't be too scared about share price increasing by 108% in one day if it's backed by really good financial news. And that's what's happened here. It's backed by good financial news. It's still cheap. A good time to buy a small parcel, which is what I might do, and then build my holding in a company if I find some more exciting news. So that's all for today. I'm not a professional advisor, so even though I've told you what I'm going to do, don't follow my advice. Do your own research or find a professional advisor who can advise you on your path moving forward. So that's all for today. Have a good day, and I hope you enjoyed this video. That's all. Bye.